Good morning, everybody. How y'all doing, man? I'm feeling good.
Yeah, now that Calandra's back.
It ain't got nothing to do with Calandra being back.
Yes, it does.
Yeah, I don't know, boy. I ain't never heard you singing early in the morning.
No, right?
Is
Y'all,
Joe them sleep?
y'all breaking up. Yeah, he sleep.
I
He sleep. What's up?
hit his phone.
Oh, yeah, he sleep, man. You know, he be up. I go in there at like 3 o'clock in the morning, Tim to be in there making beats and doing the punching. You know, the rappers these days they don't like
Yeah,
have
they
whole
want to act
verses.
like they freestyle. They just punching in, punching
Yeah,
in.
yeah, they don't have verses. They sit there, they let the beat play. They'll say a line, then they sit there,
Yeah.
let it play back. They'll say another line, just be punching in, punching in. You be in 4 o'clock in the morning. But yeah, he sleep. He'll probably roll over by 11:30. Oh, wait a minute. I think he got to go to work today. Let me see. Let me check the schedule. Let me, Timothy work. Oh, he got to go to work at 11 today, so he'll probably be up soon. You say you hit him up on his phone?
I hit your phone. I text you and sister-in-law too.
Oh, oh, I ain't even see that, man. I just
What
got
you went
back.
back to sleep?
Nah, I had to drop Chris off.
Oh, okay, okay.
Uh, Hello, good morning. I saw your brother text. I'm fine with whatever you decide. Wait a minute. Wait a minute. I see what's going on. But I ain't see none of this, man. I ain't
Here
see
to
none
learn
of
to
this.
say she figured you was doing school. That's a lady, right? I'm just saying she.
Yeah, yeah,
Here to
yeah.
learn
That's
to
a lady.
say, she say she figured you was doing school duty.
Okay.
I thought you was slobbing on the sofa, man.
Y'all, okay. All right.
And then I hit you back because you was late.
Boy, you stupid. Boy, hold up,
At the
boy.
time, my mom.
I'm for the call her right now. I'm for the call her right now. Hold on. Y'all hold on for a second. I'm about to call you. Y'all hold on for a second. Let me All right. I'm back, y'all. Can y'all hear me? Check, 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 check. Yeah.
Yes.
All right. Sorry about that, y'all. Had to handle some family business. Y'all know how I do. Family first. You hear me? Anybody that got an issue with it? All right. Let me share my screen. Hey, man. We are celebrating the fact that my sweetie made it back safely. Man, look
You done
at
singing? You finished singing? Go ahead and finish singing.
Hey, it ain't no such thing as an algorithm, but you know, I'm just a scalper. I just scalp, right? I just scalp. And right, for those that was in the Discord, right, right here. What is this right here? Somebody tell me what this is right here, what I'm circling. Do what PD array is this right here that I'm circling right there? What is that?
Like that's a new day opening gap. Look like it.
No,
I'm
right
not
here,
sure.
just right here, just right there. This
Oh,
counter,
that's a
this counter.
busy.
That's a Bissy. Okay. That's a Bissy. Right? We're gonna walk through this right here. Let me see. 15-minute Bissy, fair value gap here. Book up, book up. Right? Now, 15-minute fair value gap. Okay. Before we go any further, let's go back. All right. Price came down to an anticipatory reactionary point, took out sell side liquidity at that anticipatory reactionary point, right? Came back up, blast off, got a break in market structure, right? Traded up here. This right here, right? This is a daily fair value gap right here that these quadrants are for. All right. We're getting our bearings together. All right. So now we got displacement there, and we start consolidating here. Okay. And now we got relative equal highs right here. We drop down, sweep sell side liquidity, right? Coming to a fair value gap. And then we come back up and we create this Bissy right here. Now, where is this Bissy created at, right? Remember what I said this was, right? That's the high. Right. Now, where is that?
A discount.
Where's that Bissy created at right here in reference to these lines, right? What is this right here?
That'll be that first 25% or the lower 25% in a discount.
Right. Hold up. This right here. This is your Sibby. I mean, this is your Bissy. That's the 1, 2, 3, 4 top. Right. So it's the bottom.
Okay, so that's at equilibrium. That's at 50%.
Yes, right. So
There's a
that's
lot
it.
going on the screen.
Yeah, I know. Right. That's why I'm getting our bearing together. Right. So this middle candle right here, what is that intersecting with? All right. What is that intersecting with? Yeah, you ain't got to have the exact level, but what is it? It's a what?
Quadrant.
A quadrant. There you go. Right. So we got a Bissy that's created and it's intersecting a quadrant. Right. So it's a bullish fair value gap intersecting a quadrant, right, inside of, right, bullish order flow. So that makes that Bissy what? It makes it an ICT fair value gap because of the narrative that's surrounding how that Bissy was created. Right. And then you see anybody that's in the Discord see that I said I took a scalp off of this right here, right, to there, right? I posted the screenshots and everything, shared it with the Discord, right? And now I can give you some insight as to why my stops and take profits are like they are, right? This is a 15-minute PD array, right? So this is my anticipatory reactionary point, okay? Now, if we go down, let's drop to a 1 minute first, right? All right, we're gonna drop to a 1 minute here. And as you see here, all right, this is the candle that picked me up right there, right? That's a 749 candle right there that picked me up. All right, what's happening at from 750 to 810? What's happening during that time?
Macro.
Macro. All right. All right. And we talk about now all the other stuff that we already talked about came to anticipatory reactionary point, yada yada yada, all that right there. Right now we're getting ready to go into a macro window. All right, getting ready to go into a macro window. All right. Some may say, Tim, why you ain't just shooting for the high? Like I tell everybody, I trade primarily inside of prop firm accounts, right? I have like a daily amount that I'm content with, right? Per consistency, per this enough money for me to make, I got a daily amount, right? So based off of, right, what my own stuff is, right? You see here, let me do this right here so I can get, so I can drop down here, do a 15-second over here. I'm doing a 15-second chart over here. Now, so here we are. So this is my entry at the right here where I want to get in at, right there at this point here. That's where I'm coming in, right? Why am I coming in there, right? It's right there just below that quadrant, right? And it's coming in, you know, right here. We got this reclaimed fair value gap here, or this because we hit it and we're coming back down to it again. It's like 15-second stuff, right? Over here, right? We're trading back down. I'm looking for it to trade down below this low right here at 729. Okay. Give me thought process why I'm looking at what I'm looking at. All based off the fact that we got the 15-minute BSI in line with the quadrant, right? So that's why my entry is there. My stop loss on the 1 minute time frame, right? On the 1 minute time frame, it's below consequent encroachment of that BSI, right? And right, it's below this volume imbalance on the 1 minute time frame. On the 15-second time frame, it's below this order block right here, right? It's below that order block right there. Now, that's why I chose to do that, right? And then it's a nice, pretty much 2-to-1, right? And it fits within the amount of money that I'm trying to make, right? It fits in within the amount of money that I'm trying to make, okay? So that's why I have, and then my target, right? My target, it lines up, right? Just on the high end, just below the high of this SIBI, right? So if we want to get there and test it and come a little deeper, right? I'm already out of the trade. I got what I want, right? Y'all already know I don't like sitting in trades for a really long time, right? This pull back down here close to my entry, rally back up, right? Then finally hit the high. right? All that would have drove me crazy. Even though it's not a long period of time, that would have drove that pulling back and all that would have drove me crazy. Okay. So that's why those are my targets and to what I was trying to do. Right. But in the greater scheme of things, right, as we see, right, it delivered like gangbusters, right, well up above the new day opening gap, right off of that 15-minute BISI in line with the quadrant level from that daily fair value gap, right? That daily fair value gap. Tim, what's this anticipatory reactionary point down here? This is what I want to see price react to overnight, right? Why am I looking at that? Let's go back, right? Let's go back. Why am I looking at that? To see how price reacts to it. Same thing. Okay, same concept. This is our 20-day look back, right? These are the quadrants for the 20-day look back. These quadrants are there to show us where the algorithm will create trade opportunities. Okay. When I look at equilibrium, right, what do we have here? Right, we got a reclaimed fair value gap there, right? A reclaimed BISI right here at equilibrium, right? We have a inversion fair value gap right there at equilibrium. Okay, so we got a reclaimed fair value gap here. We got a inversion fair value gap here. And then you see, I don't have this one marked out because they're in the same place. And y'all don't know I don't like all that overlapping, right? Because the way I look at it is I'm buying the BISI, but the inversion is the supporting factor of why I'm buying the BISI. On the flip side, if I was selling a SIBI, right, an inversion fair value, an inversion BISI would just be the confluence of selling the SIBI. Okay, so that's why I got the BISI marked out, right? And then I come up here, and this right here is my inversion fair value gap for this drop, right? That's the first SIBI that was created on that drop down, right? And then you see price came down here, right at equilibrium to the reclaimed fair value gap. And then look at the bodies here. Look at the bodies here. I can't make this stuff up, right? The bodies on that SIBI, that inversion fair value gap right there. That right there is an ICT inversion fair value gap, right? We all understand why. It supports the narrative. It's the first imbalance, yada, 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 right? It's all about what is the narrative behind it that makes it an ICT PD array. Okay, that's why this is my anticipatory reactionary point. It's coming down here to the equilibrium, right? I want to see the reaction off of price here. Why? Because we are in, right? We got this market maker sell model right here, right? We got a market maker sell model. We came down. Now, where's the larger pool of liquidity? Resting right down here. Okay, the larger pool of liquidity is down here, right near the lower 25%, right? We're not going to try to force that. Why? Because the higher time frame is bullish. Okay, all we do is we look for signatures to see if that's going to be, right? We have come and used the upper quadrant as resistance. Now that we use the upper quadrant as resistance, I'm anticipating price coming here and maybe bouncing before continuing down, right? Why? Because these quadrants is where you're looking for all of your trading opportunities in a range, right? The upper quadrant to the lower quadrant. This is where the trading opportunities, the bulk of your trading opportunities are coming to fruition straight from Michael's mouth, right? We use it as resistance. I'm looking for it to find some type of support here. What did the algorithm leave here to act as support? an inversion fair value gap, a reclaimed fair value gap, right? The reclaimed fair value gap is intersecting with the quadrant. So that's why I want to see it hit here. I don't want to see it stop there. I want to see it hit here. The bodies are telling the story right now. So since the bodies are telling the story, now I'm looking for a reason to buy back up into these highs right here, right? Based off of what's going on over there. You always want to have a narrative in your mind when you're looking for your trading opportunities. Just having the tool of being able to read price action. If you don't have a strategy behind it, it's just, you just got a screwdriver in your hand, right? So you want to understand what the algorithm is going to do. And then once you understand what it's going to do, you want to formulate your strategy around, if price does this, then it should do that. And that's when you strike when the iron is hot, right? So now we are in a sell program on the intraday time frame, right? So the intraday time frame is in a sell program. So when I'm trading bullishly on intraday time frames, I'm only going for very short base hits, as you see in the example here, right? I'm only going for very short base hits because we're in a sell program and I'm trading against the grain. Okay. I'm trading against the grain. Yes, I could wait until we come up here, sweet buy side liquidity, and give me a reason to get short like here, right? But since I know what we've done here, we're going to engage these highs based off of institutional order flow. So I can take a scalp inside here, or I can take a scalp back to there, or however I choose to trade. I know what the algorithm is going to do based off of institutional order flow. But since we're in a sell program on the intraday time frame, if I'm buying, I'm taking very short base hits. Okay. Okay. Now that I done ran my mouth and the market is already open, let's go ahead and do our chart prep. Anybody got any questions while we go into our chart prep?
Yeah.
What's up?
You be entering on the 15-minute or the 1 minute?
Sometimes it's the 1 minute, sometimes it's the 15-second, but
you use the 15 for your higher time frame.
well, the 15 is usually like the lowest I go for anticipatory reactionary point. Every now and then I'll do like a 5 minute, but the 15 is usually the lowest, right? I'm typically marking out the hour, the 15. I used to mark the 4 hour, but the 4 hour for intraday trading, I found it to be a little bit too high for intraday. You know what I'm saying? And I have to wait longer for the setups. So now I mark like the hourly and then the 15-minute, and then sometime I'll mark the 5 minute if the 15 or the hour ain't giving me nothing. Right.
Okay.
But I enter based off of like the 1 minute or like the 15-second or the 30-second based off of what I'm seeing. But I'm making those decisions based off of what's happening at the 15-minute, based off of what's happening on the 1 minute. Right. Only time I take a 15-second entry is if I'm not quite sure if it's ready. And if the 1 minute give me the reaction that I wanted, then I'll look to the 15-second to try to get a alternate entry, right? Like, for example, let's just say if, all right, just use this right here. For example, I wanted to get short on this SIBI right here, right? Just say if I want to get short on this SIBI right here, okay, and then, right, when this price, right, just say when price, let me move all this out of the way. We're going to get to the tape reading, y'all. All right. So now this like a 1 minute chart, right? And then just say this candle. Oh, that's my 9:30 open. Let me mark that. And then that's our close. We already filled the opening range gap. We already filled the opening range gap, everybody. Okay, let's just say I want to get short off this SIBI here, right? And then this 1 minute kind of traded up into it, but I wasn't sure and I didn't react right there, right? So it hit, it rejected off it. So now, right, I got this line here because I show when that candle opened up. So now if I go down to like a 15-second chart, right? So now on this 15-second chart here, okay, I didn't we came and we closed there, right? And say I didn't take it when we got that right there. So now on the 15-second chart here, when we open up there, right, trade up and drop down there, right? When this candle closes, right, I would discount this candle open up. As soon as this candle traded back up like this right here, right? Once it start coming back up, boom, I would take it. You know what I'm saying? I would take a short. As soon as this candle start trading, it might be like here, it might be there, right? Why? Because the 1 minute did what I wanted to do there, right? And I would take it and I would be watching, right, that area right there on this 15-second, right? So I'll enter there, right? And then just say, as soon as this closed, as it started coming back up, let's just say I hit it and it got me in right there, right? It was as it was trading up. If it get there, right? If it get there, I might add something right there. If it made it there, right? If it made it there, I would add something there based off of this inversion fair value gap. But I don't want to force it back to that inversion fair value gap because I'm taking a secondary entry based off of what I wanted here, right? Based off what I wanted there. I'm taking a second entry based off what I wanted here. But now I'm entering there, and now my risk is to there, right? I got less risk based off of if I would have entered here, and now my risk is up here somewhere, right? So now if it trades back up to there, then I would add something in based off this inversion because it's doing what I wanted to do based off that, right? But in this case here, as you see, it didn't make it back there, but I would still be in the trade, right? Based off that. That's why I say it depends on what time frame I'm looking at, how confident I'm in, you know what I'm saying? And, but the 1 minute is typically where I'm entering based off of something that's on at the minimum the 15-minute or the 60-minute.
And you said you usually go with fair value gaps. You've been doing that before Michael started talking about the first fair value gap. What made you choose the fair value gap?
Because I because I believe in I only trade the indexes because I just follow the market, right? And so since I just follow the market, I don't waste my time trying to trade individual stocks for trading. I just follow the
Right,
market.
right.
Then I understand that the market is going to seek liquidity and imbalances. So
And the
that's
fair
why,
value gap is the
yeah,
imbalance.
yeah.
Okay.
So that's why the fair value gap is my PDU rate that I gravitate toward because I'm just following the market. I'm looking for the imbalances and the liquidity, imbalances and the liquidity. You know what I'm saying?
And Michael, like he pointed out, like I said, with the first fair value gap, it's always going to be a fair value gap at the ARPs. Anticipator. Say that for me one time.
You know what it is. Go ahead. Go ahead. We got it. We got it.
ARP. But yeah, the fair value gap is always going to be at the ARP, and they always come first. do you see order blocks being formed before the fair value gap?
In the
Like
sense of
in the first 30 minutes of everything or whatever.
it just it's what's there. It's what's there. What PD, like some PD arrays are always going to be there together. You know what I'm saying? And some
Yeah.
PD arrays may not exist. It's all about what is the algorithm. That's why I like to know it all so that I'm not
Right.
restricted to only waiting on an order block, only waiting on a fair value gap, only waiting on a breaker. You see what I'm saying? It's all
But nine
about,
times out of 10, you're gonna see a fair value gap right after an order block.
yeah, because the fair value gap is validating that order block.
Okay. All
You
right.
see what I'm saying?
Damn.
That's part of the order block. You know what I'm saying?
That's
That's
part of
part
the
of
stacks on stacks and the
yes.
blocks on blocks.
Yes.
Okay, you can get back to what you were saying. I ain't gonna hold up no more time.
I don't know what I was about to say. You know what I'm saying? But the
When you said the
conversation,
market was open, the market had not opened. We were going to get
yeah,
into.
yeah. The conversation is needed. Conversation at questions is far more important than it's far more important than just sitting up and
Chart
saying,
prep.
okay, yeah, and not even chart prep, just okay, the market is gonna do this, it's gonna do that, because
Yeah,
the
yeah.
questions is what it drives the knowledge. You know what I'm saying? The questions drive the knowledge because people want to know, hey, how do you actually apply this? Yeah, you know what I'm saying?
Right, right. That's
I
why I
can
asked them about the time frames.
oh, I'm on regular trade now. I'm like, wait a minute, where's my 7 o'clock? But I'm on regular trade now. I had moved to I was going over to look at the thing. Okay. So that's our 7 a.m.
Hey, y'all, Tim don't sleep. If y'all ain't noticed, I'm gonna do not sleep at all. But go ahead.
I take naps. I take naps. Okay. That's our 7 a.m. Mark 7 a.m. I know it's really light. Let me do this because it's people on here with us that don't no. I'm gonna let me hide some of this because I don't want to like hurt y'all eyes too much. So
My bad too. You had a question on somebody asked you something on
oh,
what you
y'all know I don't be reading the chat. Tell I know everybody is different, but seeing as you have so much experience trading prop firm accounts, what's a reasonable daily profit target when you're trading these type of accounts, 50 to 500? With the prop firms, it's all about which account what's your account size, what's your daily drawdown limit, what's your consistency rule, what's your profit targets, right? So for me, if and then also the payout windows. For me, like with Apex has an 8-day payout limit, right? And if you got a $50,000 account, I see you said Apex 50, right? They got an 8-day payout window with $50,000. You got a minimum of 2,000 that you got to get before your trailing drawdown stops following you. And I think that's the buffer. I think it's 2,000 is the buffer, 2,500. Okay. So 2,500 is the buffer, right? So once you get to 2,500, then your trailing drawdown, your intraday trailing drawdown don't follow you no more. But the 2,500 is the your buffer. So it depends on how you want to do it. Now, if you I go full screen, right? If you if no, I'll do this. I'll try to talk while I do the prep. All right. So if you got $2,500 no, but I need to tell what I'm doing. All right. So if you got $2,500 bump, that's your buffer. Okay. So you say I got 8 days before I can request a payout, right? If I only get $2,500, right, I can request a $500 payout, but that's gonna eat into my buffer, right, and go put me back at 2,000, and I can't request another payout until I get back above 2,500 over the next 8 days, right? So you decide how do you want to bill it, how do you want to withdraw, how much you want to take out, right? If you want to say I want to be able to take out $1,000 every 8 days without eating into my buffer, right? Then the first within the first 8 days, you know you need to make at least 3,500. All right. So y'all know I'm Mr. Calculator man. Call my math don't be math. Right. And if anybody be like, I want to read the tape and all this right here ain't make y'all know what to do it. Y'all know what to do it. All right. So you got to get 3,500 because if you want to be able to take out 1,000 without eating into your buffer, you need at least 3,500. Okay. So you need at least 3,500. So 3,500 divided by 8, right? 3,500 divided by 8, right? Just say if you made $450 a day for 8 days, right? Then you're going to have 3,500. Now, I ain't saying 8 days in a row, you never take a losing day, right? If you make $450 in over 8 days, right, you'll have 3,500. Even if you take a losing day one day, long as you got good risk management, right? Let's just say you're risking $200 to make 450, right? You're risking $200 to make 450. I'm just throwing numbers out there, but as long as you got good risk management, if you make $450 on 8 separate days, right, you'll have 3,500 at least, right? And so once you get that, now you know how much you need to shoot for as a profit target in that first 8 days to be able to withdraw $1,000 without eating into your buffer. Okay. And then if you say, okay, that 450 is easier for me to hit, I'm just going to leave it at 450, right? Then that's going to be a good thing if you're only withdrawing $1,000 each time, right? Because now if you leave it at that 450, because with the 50K, I think the max you can take out when you first start is $2,000. I think it's $2,000. Cause then eventually you can get to a point where you can grow it to a point where now you can take out that 2,000 without eating into your buffer because you're making 450 every time. And so now your buffer is starting to grow, right? Because 450 times 8 is 3,600, right? So when you got that extra $100, right? You got an extra $100 in there, and it's now your buffer is starting to grow because you make 36, you take out 1,000, that's gonna leave you with 26, right? So now you got an extra $100 on your buffer. You make another 36, right? Now you make another 36. Now you can take right $2,000 out. You see what I'm saying? But Tim, what are you talking about? All right. So you had 36. You had 3,600 minus 1,000, right? That's 2,600. The next time you make 36 again, because you said I'm gonna trade and I'm gonna trade until I make 450 over 8 days, right? No matter if you take a losing day, you just saying I'm not gonna withdraw until I make 450 over 8 days, right? So that means now you're getting right, you're getting at least another 3,600 on top of that, right? So now you're at least what's the name? Now you can take 2,000 out. That's your limit, right? And now your buffer is at 42. You see what I'm saying? And now you don't even have to go as hard if you don't want to, but if you just keep doing that, right, you're still, because you're making more than what you need, right? You're making more than what you need inside of each withdrawal time frame, right? And then for people that be like, well, Tim, you ain't accounting the losses. I'm only counting the actual money that you're making. That's what I'm doing here. That's why I say I ain't talking about straight days. I'm just talking about before you withdraw, you saying I want to make this amount before I withdraw, right? Right. The money that you're actually making. But you just set that based off of how the way you want to withdraw in the consistency rules, different prop firm, but Apex got like a 30% consistency. So as long as you're within 30%, you can withdraw every 8 days. You know what I'm saying? As long as you're above your buffer and you just set, okay, this is how much I want to do per day, right? This is how much I want to do per day. For me, I got like a minimum I want up to like a maximum, right? I'm trying to get at least 300. I don't want to get no more than 600, because if I get more than 600, now I'm getting outside of the realm of, now I got to trade bigger and bigger and bigger and hold my trades longer and all of that stuff like that right there. And I don't want to do all that. All right. Hopefully that helps you. Okay. So this right here is our 7 o'clock line. All right. That's our 7 o'clock line. That's the start of, hopefully y'all can see that. Can y'all see that line now? It's like that dotted vertical line. All right. I'm gonna I really want this stuff on there because it's important, but it's a lot going on. Since we already used this, I'm gonna hide these, right? I already explained what those were for. I'm gonna hide those, right? The sell side, I'm gonna go ahead and delete that. Don't need that. Okay. All right. And then this right here was our pre-market low. That's what we was about to do, right? These are the levels that you always want to keep in mind, right? This is our pre-market low right there. The lowest low from 7 o'clock until 9:30, right? This is our pre-market high, the highest high from 7 a.m. to 9:30, right? This was our pre-market high right there. It's higher. All right, that's our pre-market high. Okay. I'm going to hide this daily fair value gap quadrants. All right. This is our going to hide our new day opening gap because it's inside the new week opening gap. All right. This right here is the new week opening gap, that purple area there. Okay. Regular trading hours. I switched over to regular trading hours because we always want to identify liquidity in the regular trading hours. Regular trading hours, our PM high is here. This is our PM buy side liquidity. So buy side liquidity for the PM is the highest high made in the afternoon session from 1:30 until 4. Right. That's our PM buy side liquidity there. Right. And our PM low. You want to look at your PM low. Why are we looking at the PM low? Because it's the next session, the next New York session. Whenever you go into a new anything, you want to look at the low and high from that prior whatever it was, right? So our PM low is all the way down here, right? That's our PM low there. So our PM high, PM low, and then I typically don't look at the lunch high, but our morning high is up here. If price got really animated, right? This is our morning buy side liquidity up here, our morning high, regular trading hours, right? Because remember, we're in a sell program on the intraday time frame, and the higher time frame is bullish, right? So we're looking at if price gets animated, because and that's close to a quadrant of our 20-day look back. Remember, we reacted off of a quadrant here, right? So if we get the ping pong quadrant to quadrant, all right, we got buy side liquidity resting there at that quadrant, right? And since we're below this quadrant in a sell program, right, you would anticipate us to use that quadrant as resistance if price is still in a sell program. All right. But if the higher time frame is, you know, taken back over because we came down to a discount PD array, right, then we're looking for signatures that we will take this liquidity, then use this new week opening gap as support, then take this liquidity and use this quadrant as support, and then take the daily high, and then, you know, that's how you stair step it up, right? So we've taken the afternoon buy side, right? Nice displacement away, and within that last 15-minute candle, and that set our opening range high, right? That's other liquidity that you want to pay attention to, right? Put that up so much in it now. Why did I mark this out? Do anybody know why I marked this out? Why did I mark that out? What was that for? Was that when I was talking about something? I don't know why I marked that out. Okay, so our opening range low. I usually put these lines on here, but I don't want to put so many lines. Our opening range low is here, and our opening range high is there. Right. Okay, since we already engaged that regular trade in our buy side, right? I'm just gonna borrow this line, right, and make that our opening range high. All right. We know we already engaged that afternoon buy side. So we've engaged our opening range high immediately, right? Right. So zooming out, looking at what price has done. Okay. We said we're in a market maker sell model, right? The the bulk of the liquidity is here for a market maker sell model here. Okay. We have gotten a smart money reversal up here. We've dropped down, traded back up into that area, dropped down. So now, for the sake of the sale program, right, right, a very bearish sale program, this high will stay intact, right? That high will stay intact for a very bearish sale program. Why? Because it's above this quadrant, right? And you wouldn't want to see price digging back through this balanced price range right there for a very bearish sale program. All right. So, right, all eyes are on how price trades in reference to that inversion fair value gap there. Okay. That's our first BISI created before we got this change in the state of delivery, right? So all eyes on how we trade here. It's a 15-minute BISI. So that BISI there, right, is that, that BISI there is at this balanced price range right here. And if this sale program is strong, right, You want that to stay in place. Okay. This right here would be the ideal place for it to sell back off. Right. And that's because we haven't taken out substantial liquidity, but we have traded back into an area of support, right? Not traditional support, but we have a quadrant level. We have a quadrant level in our 20-day look back, right? And we've traded down into discount PD arrays, and the higher time frame is bullish, right? We've retraced back down into a discount. We've come to an area of fair value in our 20-day look back, right? So you always want to keep that in mind. But for this sell program, right, the significant liquidity is here. Okay. Does it have to go there today? Nah, it don't. Right. But you want to always understand, why should price do what it does, right? And right here, right, that's our high probability inversion fair value gap right here for this run, right? So we got consolidation, expansion, reversal, a retracement. We've come back to the premium right there, right? Come back to the premium here, there, right? So that's why all eyes are here to see how does price show a willingness to want to continue down from here. All right. Let's look at the sisters. See if we got any divergence. We haven't looked at that today. A little bit of divergence. The YM is just consolidating. Right. The YM is just consolidating over here. ES is going up. The NQ is going up. Right. So we got a little divergence. It's not really bad divergence where the Dow is dropping and the NQ is rallying. Right. We got an hourly SIBI right there. We're trading up into also. Right. Everybody is still looking strong right now. Right. So everybody is still looking strong. We got internal liquidity on the NQ. I mean the ES. Right. That's that same liquidity on the NQ. Well, I say you will want to see that stay intact for the bearishness to be really heavy. And then that same high right here on the Dow. Right. So the Dow is at that high. That's the same high on the ES. And that's the high on the NQ. Okay. Then looking at regular trading hours. Right. We've taken the internal liquidity there. Right. Taking the internal liquidity there on this 15-minute time frame. There's an imbalance whale up here if price wants to get really animated near that upper thing, but we're looking for that heaviness at that inversion fair value gap as noted before, like here. Oh man, it's out to 10 already. We done ran our mouth. Talk about other stuff. We done ran our mouth, talk about other stuff. Oh, wait a minute now. Wait a minute. Uh-oh. We done can't. Look what else we got in that same area. That first opposing PD array for the 9:30 of yesterday. Look what else is in that area right there. That first opposing PD array, right? That's our first presented for 9:30. And this is the first opposing for 9:30, right? Went right up there to consequent encroachment of that first opposing. Right. Come back down. Just created an inversion fair value gap there. Right. Looking for that heaviness. Seeing if we're going to get some heaviness there. This is a nice strong move up, and everybody's looking bullish. But like I say, you want to stick with what's going on until proven wrong, right? And right now, the intraday is in the sell program, right? Intraday is in the sell program, and that sell program has not been invalidated for the intraday time frame, right? Just like the buy program hasn't been invalidated on a higher time frame, but you stick with what's happening until proven wrong, and you just identify the signatures, and you over time you learn to build a trust for what's going on by adding the different stacks on stacks, blocks on blocks, right? And I wasn't even looking at my 1 minute time frame, and when I flipped to my 1 minute, I saw that we got a reaction off of that first opposing PD array, right? And if you scalp McGee like myself, right, let's just say we entering, right, off of that high right there, right? And that already that's well beyond what I need right there. Back to that order block right there. This from that high back to that order block right there. That's 33 points. That's well beyond what I need. And if we go right to the low of it, that's 28 points. That's well beyond what I need. I'm happy with that. Right? It's all about what you need. You know what I'm saying? What you need for your trading strategy, your trading style, your profit targets. You know what I'm saying? All of the above.
Hey, Tim, what tool did you just use to count those bars?
The info line.
Okay, thanks.
Yeah, the info line, it tell you how many, it tell you time and right. So if you look at it, like if it's telling me I'm stretching over 12 bars, and that's 12 minutes because it's a minute, and now I've pulled it down 20 and a half points, right? It's letting me know like how far is it going and how much time it's taking to get there, right? So you say, okay, if I want to enter a turtle soup off that high, right, and back to this order block right there, it hit that order block on this candle there, right? So I would have gotten picked up on this candle. So that would have been taking 2 minutes, and it was 33 points, right? Went up, came down, right?
Is that the tool you use to do the 20-day look back?
Yeah, that's just let me know which one is you can either do it like that, or you can just hold shift and just click on the screen and then start pulling it like this right here. Like if you hold control, you can like move it how you want to, and that does the same thing. But this right here be acting kind of funny sometimes, so it's just easier for me just to grab the info line and click it and go like that right there, move it around. But like if you just hold shift on the thing and just click the screen, it turns into whatever you call this right here. And then, but once I have my lock on, so I have to hold control so that I can move it how I want to. It won't snap to the candles, right? And you can do the same thing. See, it's like telling me now I'm back, like I'm back 20 bars. So if I came to like you just click away and it disappear. If I came to a daily chart, right? If I came to a daily chart and I say, okay, where's this is yesterday, right? So I want to include that day. So I'm going to come right 1 day over, right? And I'm going to click there and then just stretch it back until that says 20, right? So now that it says 20 inside that range, say again, Si. You about to go to work? You going to the gym after work? Oh, yeah. All right. I saw your shoes. That's why I asked. All right. Have a good day. Love you. Right. Then I can look and say, oh, that's my lowest low. That's my highest high 20 days back. And then that's the range that I'm going to be looking inside to take trading opportunities right here. And then as we see, this is the daily fair value gap right here that I was monitoring with the quadrants. Right, I had the quadrants on it because initially I had the green showing, but I had all the other stuff on the lower time frame, so I just switched it to the quadrant so it won't be so much in the way. And see, we've retraced down into an area of support. So that's why I say right now we're in a sell program intraday, right? But for the higher time frame, only thing we did is a retracement, right? So you look here, we got a consolidation, expansion, reversal. Now we're in the retracement, right? And we're looking for a delivery on the higher time frame. What do we have here? We have an order block in line with a quadrant, right? This right here, you're anticipating this to act as support for the higher time frame bias. Okay. And that's why that same area there, that's why I was looking for if the algorithm is going to give me a buying opportunity at that area on the intraday time frames, right? So based off of the daily coming to this area of support intraday, now we're getting a nice bounce here. Okay. Does this bounce take us all the way back up? We don't know. We're right now, the intraday time frame is in a sell program that hasn't been invalidated, right? Yes, the higher time frame takes precedence. So we're not trying to force it down here to these lows, right? These are the lows right here. If you remember on the intraday time frame, right? Those are the lows where we said that's where the bulk of the liquidity is, right? We're not trying to force it down there. Why? Because we're in a bullish season, right? We've had a nice retracement and we have completed a smaller market maker sell model, right? We've completed a market maker sell model at an anticipatory reactionary point, but this sell program is not invalidated, right? It has not been invalidated. We can come very high, even up here to this daily high, and still not invalidate the sell program, right? That's why it's important to never try to force what you want on the market. You just follow the order flow until proven wrong, right? And on the intraday time frame, you can make good money scalping, right? You can make good money scalping just by we came into an hourly fair value gap right there too. There's an hourly SIBI there also that I didn't have on my radar right there, right? And that aligns with our inversion fair value gap there. Okay, so now we've gotten right a reaction off the inversion fair value gap, but now what are we up against? We're up against the fact that we've created a BISI right here. This BISI is designed to keep price up, right? But since we're in a sell program, right, you would want to see this BISI fail, right? But if this BISI does not fail and pushes back up, right, then you are looking to go to the next level, that quadrant, right? And if that quadrant doesn't stop, then you're looking to see if price wants to draw into that liquidity, right? If it does draw into that liquidity, it doesn't invalidate the sell program, but that's showing that it's a little bit weaker than I personally would like to see, right? Because you don't want to see deep retracements when price want to move, it's going to move. All those deep retracements and overlapping candles are what? It's indicative of what? It's a characteristic of what? Talk to me. Deep retracements and overlapping candles.
High resistance liquidity.
High resistance, yeah.
Yes, high resistance liquidity runs, right? You don't want to see that. There's your and that's the oh, it's 10:18, man. I'm well beyond my scope of tape reading time.
Tim, I missed it. What quadrants are those that you have listed?
These nuts. Ha! Got him. It's
Whatever.
the
What's the quadrant?
you talk about the thick blue, the blue and red, and
Yeah.
that's the 20-day look back. You can't see it over there on the side. It's
Okay, I have a look back on mine, but then you had quadrants for when you said the next, if we kept going up, the next target could be the quad. That was that
Yeah, that's the 20-day look back upper quadrant. Because we
Okay.
traded down to the 20-day look back equilibrium.
Okay.
Right. And this right here was the area where we had, you know what I'm saying, the reclaimed fair value gaps. We had inversion fair value gaps at the quadrant, and we was looking for a bullish reaction off of that. And then now that we got that bullish reaction off of that, if this right here is our inversion fair value gap, that should push us back down, because this is our, you know what I'm saying, this was our expansion. We had the consolidation, expansion, reversal. This is our retracement into a premium. This should give us the delivery. But if the sale program is over and we continue bullish, right, these are the areas that you're looking for draws. That's a draw. That's a draw, right? Even because even if we come up here, we still haven't invalidated the sale program, right? But these, you just want to have bullish draws that you can like go toward, you know what I'm saying, and still be within this sale program. Okay. But this is where you want to see it get heavy if the sale program is really, really bearish. And right now we're still reacting off of that. Right. And so you want to see this fail. If this doesn't fail and we pop back up here, then you want to see the new week opening gap be used as support to take you back to the next quadrant. Right. And that quadrant, right, that quadrant should push us back down, because when we look at our quadrants, I like to say we ping pong in between them, right? Like we came to the upper quadrant to the high, right? Then we bounced there, then we dropped down. Once we use the upper quadrant as resistance, we drop the equilibrium, right? Then we can bounce around in there, right? And then if we drop below it, then you look for it to take you down to the lower quadrant, right? And if we get below it, okay. All right. Now we're right back at equilibrium of the new week opening gap. And then this is where, right, you can really fractalize all of your concepts. Right, I'm gonna start moving some of this stuff off because I'm done with the tape reading. I'm done with the tape reading. All right. I still don't know why I put this on here. I think I was just talking about something. I don't know. But I don't know why I put that on there.
I think you were saying something about the city. You were showing us. I mean, the busy. You were showing us. You were just mapping out everything, putting everything together. You say we gonna get our bearings or something. You was
Yeah,
marking a lot of stuff.
I can't remember why I'm
That
marking,
ain't that
but
where you took the trade this morning?
oh yeah, that's
Oh,
what it
okay.
was.
See,
Yeah,
bam.
that's what it was. That what it was. That what it was. Okay, so this way you can come in and fractalize the concepts, right? You come here and come there. Now, right, we're looking at the quadrants of the new week opening gap, right? So now we're looking at the quadrants of the new week opening gap. So, right, when we come into the new week opening gap here, we trade up above the lower quadrant, right? Get a nice closure above the upper quadrant, right? We drop down here. We go at 9:30. We come down and we sweep out liquidity, trade down into this BISI, right? We tapped it there, come down, reclaim BISI, come down into the reclaim BISI, and then we blast all the way up and close above the upper quadrant, right? We hit our premium PD array that should take us back down. Then we come back down to equilibrium. So now inside here, right, if you just want to trade inside the range of this right here, right, you have these areas there. In this case, price really was moving, so it probably didn't give any opportunity to do anything, right? Right. So when we come in here, right, we drop down. That's we swept the liquidity, right? Come back up, blast up, didn't give an opportunity to do nothing here. Set an order block, right? didn't really retrace back into the fair value gap there. Okay. Now we've come up here and we've broken back down. So right now on the 1 minute time frame, ain't nothing like uber clear, right? Ain't nothing uber clear right now. It didn't give many opportunities on the 1 minute time frame, but in the sense of what price has been doing overnight, right? Where do we start? We can look at what price did overnight. Okay, so in the sense of just today, right? Just looking at today. All right, so for today, we open here, traded down, right? And we've broken bullish. So for just today only, right? We're in a buy program. Right. So just based off today only, we're in a buy program, right? Overall intraday bias, we're in a sell program. All right. So if you're, like I said, if you're trading, like I took a long based off of the bullish bias, right? I took a quick scalp because I'm trading against the overall intraday time frame, right? But if you're riding with the bullish order flow of today, right? Price, right? Came down to that fair value gap at that quadrant right there of this right here. And now it rallied back up, right? Where's the base hit? The base hit is right there. Trade is over, right? The overall time frame is still bearish. It's still holding up right now. Now we have another fair value gap here at this quadrant right there, right? It ain't no long ways, you know what I'm saying? But the high's right there. You see what I'm saying? It ain't no long ways, but in that case, it ain't no long ways. The high's right there, right? That fair value gap lined up with the quadrant, right? This just was a little small little run, but the high is right there. Okay. Right. But this one here gave you a more meaningful move, right? You got a high there, you trade down into that fair value gap in line with that quadrant. Boom, the high is there. Okay. It's like you can take little base hits, right, and see, what else it offer. Okay, but coming off of that one there, what time is it? 10:26. Right, we're getting ready to come into that half-hour time frame. Right, watching this high to see if we create an intermediate term high. Right, technically with that high right there, technically it already is an intermediate term high, right? Because we got a swing high right there. All right. So technically it is, even though that's like a little, a little small little swing high, right? Price was moving here, price was moving there, right? And price is moving here. So if we take that high out, right, that's more of a significant high being taken out, because right now it is an intermediate term high. Right. And then we take out an intermediate term high. What can that bring? That can bring a deeper retracement. Right. These are all things that you want to keep in mind. But, you can go in and fractalize the concepts. Right. And it went well beyond right there. Right. Got the BISI there. In this case, the next high was there, but but it went well beyond there, and it's taking that right there. Right. So that was a good example of fractalizing the concepts, working off the new week opening gap, right? Just looking for trades inside the new week opening gap right there. Based off the bullishness, right? We've expanded up. We've used this order block and BISI as support, right? So when we create another BISI right there, engaging that right there, boom. You look for the entry. Like I said, that's a short little move right there, but it made it back to the high because that first move there was just right. That's your low hanging fruit right there. That's good enough for me. 17 points right there. 17 points. That's $300 and some right there on the NQ. and then back to the high was 45 3/4 points. That's a much more sizable move, right? But just fractalizing the concept. Same thing I traded off of earlier. Remember I said the fair value gap in line with the quadrant, fair value gap in line with the quadrant, right? Anybody anybody got anything before we get out of here? It's 10:30.
No, thank you very much.
Did anybody find any value in what we spoke about today?
Yes, it's like a lot of tape reading for me instead of clicking the button and just really learning to see how it price reacts to those levels. So,
Yes.
and then I just get confused sometimes with so many, you know, how we've marked our dealing ranges in the past, and then now using the quadrants, and then now using the first percent. So it can be a lot. So
and
trying to
like
see what's most relevant.
like I said before, if all of it is overwhelming, don't pay attention to it. Just pick what you gravitate toward and study that and become very efficient at that. And once you become very efficient at that, then add something else on to start studying along with it. And then once you get efficient at those two things, then add something else, right? Because we're looking at a man's life's work that he's compiled all of this stuff over 30 plus years, right? And we're trying to learn it in a year, in 2 years, in 3 years. This is stuff that he has compiled over 30 years. He didn't learn it all in 1 year, right? And the way he actually teaches his concepts, it's like a 4 year thing, right? He wants you to take a full year just learning what the concepts are. Then he wants you to take a full year just tape reading, right? The full year just tape reading. Then he wants you to take a full year just sim trading, right? Actually pushing the buttons, but you're not risking real money. You're not earning real money. And then after that, right there, then, you know what I'm saying, now it's time for you to go in and start pushing money and risking real capital, right? So that's a 4 year thing, right? That's a 4 year thing. That's just the way he designed his mentorship, right? So
Yeah, that totally makes sense. It's just being patient
mhm.
and finding the model.
Yep. And don't forget now your entry model is just a small portion of your strategy, right? You want your strategy to be linked to what order flow is doing. What is the institutional order flow doing? And now I understand what it's doing. So now that I understand what it's doing, I want to see price do this, because if price does this, then it should do that, right? And so once the price does this, now you can start looking for your entry model, because it's done this. Now it should do that, right? And then you enter after it does this. Okay. So like we are saying before, like I was talking about, we came here, right? Use that as support, right? And then you say, okay, now that price has done this, use this as support, it should do that going into that high, right? Why? Because we came here, we dropped down to an area of support, and now from this area of support, right, this is my reasonable target right there. This is my low-hanging fruit. This is my reasonable target. Now that I've come here to my low-hanging fruit, right, I created a BISI right there. So since price did this, it should do that. So now I'm looking to enter here because price did this. Got a break in market structure. I have a balanced price range, right? Going from the low of the candle that left that price range to there, right? I have a BISI that's in a discount of my range. I'm looking to buy in the discount, right? Price has manipulated sell side, and now I'm looking for a reason to buy in a discount, right? That your strategy is, I want to see price manipulate sell side, then give me an opportunity. I mean, your entry model is, I want to see price manipulate sell side and give me an opportunity to buy in a discount. That's your entry model. And your strategy is, because price is bullish, we're in bullish order flow, and we have come down to an area of support and respected it. Now I'm looking for my entry model. My entry model has formed out, swept liquidity, breaking market structure. There's my opportunity to buy in a discount, buy, boom, right? Because based off this, price should go there. Okay. It's like, you want to combine, you don't want to just look for a 2022 model without having a strategy. You can use a 2022 model, but you want to have your strategy behind it, because the most important thing is understanding what price is drawing toward, right? What is price drawing toward on the higher time frame? What is price, Tim? If you are doing the price action recap tonight, for those of us who haven't reached consistent profitability yet, can you tell us about your own journey and how you became consistent? Yeah, I shared that. I shared that a lot of times. Yeah, I shared that a lot of times. And I'm gonna tell you the secret right now. All right, I'll tell you the secret right now. What made me become consistent ain't gonna help you at all. It's not gonna help you at all. What made me become consistent was losing a lot of money. I hate losing money. So losing a lot of money made me stop losing a lot of money. Right. And then once I stopped losing a lot of money, then right, I became consistent. Right. I became consistent. Now, do I take losing trades? Yes, I do. Do I take winning trades? Yes, I do. It's all about risk management. You want to lose less than you make, right? Don't over leverage. Um, don't over leverage. It's hard not to over leverage, because we all want to get rich right now. We all want to quit our jobs. We all want to be a full-time trader. What you don't want to do is quit your job and now trading is your job, right? That, because you're going to be a slave to the charts, right? You're going to be a slave to the chart. You don't want to be a slave to the charts, right? Have a strict routine of, okay, I only watch the market in this window right here. All right. If it's not offering me anything within this window, it's not meant for me to trade that day. Right. You don't want to be a slave to the markets. Okay. Then, like, if you grow in your understanding of how price moves, then you may be able to say, okay, the New York morning market is trash. I'm not watching it. I'm gonna come back and look at the afternoon, see what the after, because a lot of times if the morning is trash, the lunch or the afternoon will be good. It'll offer something, right? So you don't want to be a slave to sitting in front of the charts. Okay. And you want to, the problem with people think the problem is they don't have the right strategy, or they don't have enough experience, or they just not a good trader. No, the issue is you don't trust your strategy. You haven't vetted your strategy enough, right? This is I'm gonna tell you, like, this is the secret sauce, if you will, right? Secret sauce. Learn how to, Monica. Where you at? Can you talk right now, Monica? I'm gonna share this link, right? If a crank yanker come up here, I swear for cheese and crackers, I shut my whole internet, my whole YouTube down, right? Monica, click on that link right there. Come inside the Zoom. unmute and talk to me. And I don't want to hear, I can't talk right now because I'm at work. You doing a lot of typing in this chat right now. Click on that Zoom link right there and pull up inside Zoom and unmute and talk to me. I need to know who I'm talking to. Let me see here. At work, you spot on. I don't care if you're at work, you typing. Get you in a cubicle, hide in the cubicle and unmute and talk to me. All right. With your slow typing self. How much of the concepts do you understand? Do you understand like the concepts? Where are you versed in the concepts, or are you still learning? Monica, you typing so slow right now. I'd have fell asleep. Monica done got called into a meeting yet. I know a bit, but I can't seem to slow down because I'm trying to save my house from foreclosure. I know it's a terrible excuse to take trades. Yes, it is. It's not a terrible excuse to take trades, right? And I appreciate you for your honesty. It's not a terrible excuse to take trades. That's a wonderful excuse to take a trade. But what's happening is your overwhelming it's not a fear. This is reality that you're living right now. You have this overwhelming circumstance in your life right now, and the water is here, right? The water is here. You can't even get your nose up to breathe, right? And you're in fight or flight mode right now. So you're looking for that base hit, right? You're looking for that home run. And there's nothing wrong with that. We've all been there, right? We've all been in situations where we have dire straits, right? But when it comes to trading in anything, right? If you're not following a vetted strategy, you're just gambling, right? You're just gambling. You come out better just going to the quick stop, going to the quick trip, going to, what I'm saying, your local package store and just buying a Mega Millions ticket because you're just gambling, right? What you want to do, right? I don't know if you're a Christian or what you believe in, right? But you have to, what I'm saying, you have to put some stuff in God's hands, right? The things that are out of your control, put it in God's hands, and you can control what you do. You can control your actions. You can control if you push that button, right? So you got to put your big girl panties on, suck it up, and say, you know what? I'm not gonna be a degenerate. I'm going to I'm going to etch out a strategy, and I'm going to etch out a strategy, and I'm going, okay, you ain't nothing wrong with that. You don't practice, that's fine, right? You I'm going to write, this is my strategy, right? And this is what I'm going to stick to, right? I'm going to stick to it because I've vetted this, right? I've gone through price, okay? So this is what, right? This is what you do right here. Right, I'm gonna share my screen. Okay, I'm gonna share my screen. All right, take everything off my screen right here. Let me see. All right, clear everything off my screen right here. All right, put it on a daily chart. All right, I'll put it on a daily chart here. Okay, and then, all right, this is what you do, right? You go through and you look at, let me go to the continuous contract so we can see everything, right? You go through, I'll put it on a daily chart, right? Squeeze up this daily chart right here, right? And you say, Tim, I can't see nothing. Now, it's good that you can't see nothing, right? So you come to this daily chart, right? And I want you to look back, right, through this daily chart over time and see what price did as far as liquidity, right? Lows and highs. Okay. What price did as far as liquidity. All right. So just coming over here, we see we came up, we made a high there. We dropped down below some lows there. Okay. Then we came up. We didn't take out that high. So what is that? Relative equal highs, right? We dropped down below some lows. And then once we came up right here, we took out these highs, right? Then we came up and we took out those highs, right? So what do we notice about this right here, right? Price came up, right? We made relative equal highs. Okay. We came down, took out liquidity. We got a break in market structure right there. Once we got that break in market structure, right, we started to go up. Okay. That's what price did there. Okay. Then we came over here, right? We came down. We swept out some liquidity right there, right? We moved up, came way up here. We dropped down. We set relative equal lows. Okay. Then we came up here. We took out buy side and we came back down and we took out those relative equal lows that we set. Right, came down, took out them relative equal lows. Man, we had some relative equal highs that we set, traded away, came back and took it. We created some relative equal lows. We traded away, came back and took it. Right, after we set these relative equal highs, we took out sell side, took out the relative equal highs. After we set these relative equal lows, we came up, took out buy side, came down, took out them relative equal lows. Right. So you're noticing a pattern. What is price doing? It engineers liquidity by creating relative equal highs, trades away from it, manipulate sell side, then come back and take out those relative equal highs. It engineers liquidity by creating relative equal lows. It trades away, takes out buy side, then comes back to those relative equal lows, right? When will it come back to it? We don't know, but we know it did it. So we know it's going to come back to it. We know it did it. We know it's going to come back to it, right? So now you see how the price is moving on the higher time frame. Guess what? It does the same thing on the lower time frame. And the lower you go, the more opportunities are going to be there to have entry and exits. But the more frequency you go, the more you open yourself up to risk. All right. So now you study how price is moving just based off liquidity on the daily time frame, right? Go through and annotate, make detailed notes of what days of the week did it sweep the liquidity, right? What days of the week did it sweep liquidity? How many weeks did it take to sweep it? Was it based off of something that the monthly chart was doing? When we got this pullback, did we retrace back down into a monthly PDA rate? When we got this pullback, did we retrace down to a weekly PDA rate? Making all these notes, annotating all this stuff to understand how price moves on the daily and higher time frame, right? Then once you get that, you understand how price moving, you see like how the institutional order flow works, then you take that knowledge of how the institutional order flow work on the daily time frame, and then you go to your intraday time frames And now that you understand how the institutional order flow works, now you're going to the intraday time frames and you're looking at, right, how is my market maker models forming? How is the price delivering within these market maker models? You're going in there and you're studying that, right? You're studying how is price delivering inside of a market maker buy model, inside a market maker sell model. But Tim, how do I study that, right? Just come here and we're going to come just pick out anytime you see price, right, go up, take out a high, then come back down and take out that low right there. That right there is a market maker sell model right there, right? So this is like super far back, so I'm not going to be able to really get in and study that in detail. So let's see if we can find one over here, right? So we'll come here, right here. So there, we got that right there. Right. That's the low there. Right. And a lot of times you won't be. Matter of fact, let me see how far back I go. I just go to 5 minutes. I'll see how far back I can go. I go back pretty far. That's the end right there. So that's the farthest I can go. That's the furthest I can go there. Mark that out. All right. So that's the furthest I can go back. Right there. It's the furthest I can go back. Can't get that little bit of information there. So let's come here and look at this market maker buy model right here. Right. This is a market maker buy model right there. So that right there. All right. I'm going to go in, study that. Okay. Right here. So I'm going to start a new. Let me go above that high. Right there. Right. So now, right, this right here. Right. So what we're doing, we're studying how this moves right here, how that moves away. Now, what are you studying inside this right here? Right. What I had to learn was, right, you see this range from this high to that low right there, right? I'm not studying it because of this here. I'm studying it based off of what happens after this is formed, meaning in this direction right here, right? That's what you're studying, right? So we know that this market maker buy model panned out. All right. And so when we're studying, we're going to annotate our journals as if we knew, right, before any of this price action right here existed, right? We knew that price was bullish. Okay. We knew that price was bullish because we knew we was in a buy program. All right. And we're just looking at this as manipulation, right? Because we always want to be able to identify the manipulation, because if you're able to identify the manipulation, then it gives you the opportunity to get in on nice moves. Okay. So we're just looking at this as the manipulation. So when you look at the price, right, you understand this is my manipulation leg. So when I'm annotating this range here, right, now I'm looking for something to set up here, here, and here to take me back there in the future, right? In the future. So when we are looking here, we go there, boom. Right now, let's go down to our 5-minute time frame. Okay. So we're in our 5-minute time frame, and prices up here. Right, prices up here. Prices up here consolidating. Right, we're bullish. So when we see this up here consolidating and we start to drop, now we said that right there is our initial consolidation. Right, that's our niche consolidation for a market maker buy model. Okay, because we saw that consolidating and it dropped down. All right, we're bullish, so we're looking at this. Ain't none of this happened yet. Right, so then we drop down. Right, we come through here. We got our areas of distribution and redistribution and all of that right there. Then we come down here, right, and we make a low right there. None of this exists already. We make a low right there. Once we make that low, right, after we've come down to something important over here, there's an anticipatory reactionary point resting right here. We're just saying that, right? But there's an anticipatory reactionary point resting right here, right? We've come to our anticipatory reactionary point, and we made a low. All right, we made a low, and then now that we've came to our anticipatory reactionary point, we've made an important low. He's smiling because he's important, right? Once we made that intermediate term low, right, we know that's important low, right? Once we break up there, so we come down, made a low, traded up, made a low, traded up, made a low, and once we break right there, that's an intermediate term low. We're not expecting that low to be taken, right? Since we're not expecting that low to be taken, now we run our fibs from our initial consolidation down to our intermediate term low, right? So now, right, we're looking at this right here as our smart money reversal, and now we're looking for reasons to buy until we get back to our initial consolidation, because the overall price is bullish and we identified this as manipulation, and now it's time to go back up, right? And then if you notice here, right, if you notice here, I can't make this stuff up now. All right. We come here, stretch this out. That right there, that's the first fair value gap that was created before we get this change in the state delivery. Right? Price comes back down. What are we respecting? Right there. Get in there. What are we respecting? Right here. Once we, right here at this quadrant level, right here, this quadrant level, right, we got an inversion fair value gap over there, right? And then when we came here, what do we put there? We got an order block there, right? Got an order block there. All this stuff right here. We got a reclaimed fair value gap there. All this stuff right here, this quadrant level, right? This order block there, intersecting with that quadrant. This order block there, intersecting with that quadrant on this 5-minute time frame, right here. Okay, right, where we come to, right there to that quadrant, right? Then we go up. Once we leave that quadrant there, we blast off, right? Price accepts this new area after this blasting off, didn't come back, right? We come back here, right? Right here at this quadrant, busy at that quadrant, take us back up, come back down to that same busy at that quadrant, take us back up, right? Can't make this stuff up, right? The algorithm is setting up these opportunities there, right? Once we come up here, right? Once we come up here, we trade back above, right? We take out key high right there, right? We take out a key high. What do we say about taking out key highs? We can anticipate a deeper retracement, right? Where's this happening? Right at that quadrant. Once we take out that key high at that quadrant, where do we go? Back to the lower quadrant. Right? Go back to the lower quadrant. Once we get back to the lower quadrant, we don't fail and go through it. Right? We come back up, get back above the equilibrium. All right. Once we get back above the equilibrium, right, where do we go? We go up to the upper quadrant, right? When we get to the upper quadrant, we sweep out liquidity at the upper quadrant, right? We come up here, manipulate out buy side. Where we at? We up here in a premium. We drop back down, right? But we don't take out the equilibrium. And we come back up, and this time we come back up, we use the upper quadrant as support, and then we deliver into that right there, right? It happens over and over and over and over, right? But what you need to do is go back through price, right? I rushed through this right here, but you want to go back through price and do this exact same thing and study this over and over and over. See what time of, you want to mark everything. What time of day did we create this intermediate term low? What day of the week did we create this intermediate term low? What time of day did we interact with what time of day did we create this inversion fair value gap? What's the time of that inversion fair value gap? When did we interact with it? Right? When did we set our daily high or our daily low throughout this whole run? What day of the week did we set that daily high or daily low? What you want to annotate everything about what price is doing, right? And you got key levels to anticipate when price is going to react, right? And you want to go through and you want to study it based off of what you see already happened, right? Right now that you see, we already know this market maker model played out, right? So now you want to use the benefit of hindsight to see what did we react off of over here, right? And why, right? So if I come here, just gonna put this line right there, right? And so we see here on the hourly time frame that we took out some liquidity. We manipulated some liquidity, right? On our daily time frame, right? On our daily time frame, we see that we drop down into a bullish order block that's in line right here. That's either a breaker or a mitigation block right there, right? Yeah, right there. In the sense of price moving, right? Right. In the sense of moving, it's a breaker, right? Right. In the sense of price moving, we made a high here. We consolidated a little bit. We dropped down, made a lower low and a higher high, right? So in the sense of moving, it's a breaker. Don't get caught up in the weeds and saying, oh, well, this run right here didn't, we're following the money, right? We got a large move up. Who cares what happened in between? We got a large move down. Who cares what happened in between? We got a large move up. Boom. We got a breaker right there. All right. You want to follow the money. Okay. On a daily time frame, we came down into a daily order block, down into a breaker, right? That's what happened on a daily time frame. On the weekly time frame, right? On the weekly time frame, we came down. Get out of here, lines. Right? We did not make it into that bullish fair value gap right there. Right? So we didn't touch the bullish fair value gap. We just traded down into the wick of that candle. We did not, we did not touch the bullish fair value gap there. All right. On the monthly time frame. All right. So on the monthly time frame, also, this is where we was at there. Right. Something inside there. So nothing significant on the monthly time frame or the weekly time frame, but on the daily time frame, we did come down into a daily order block, right? So now you got the knowledge of we came into a daily order block It was in line with a daily breaker, right? The order block was right there at a breaking structure because it was in line with the daily breaker. So we came to a daily order block that was at a daily breaking structure that was at a daily breaker, right? So we came down to a discount area of support on the daily time frame, right? We'll look at what day of the week was that order block form, what day of the week was the breaker form, all that stuff, right? And then you go in and you start to annotate, right? 2 p.m., right? We made the daily low on the 2 p.m. hourly candle right there. You want to go all the way in and look at the minute that you made it, right? So we made the daily low on a this is a Friday, right? So that low right there is on a Friday, the 8th. Okay. So Friday the 8th at 2 p.m. is when you made that. That would have been at the end of a week, right? That would have been at the end of a week. So this right here is this week right here. So the 4th through August, the 4th through the 8th, right? So that's the 4th through the 8th right here. So let's highlight this week here. Well, if I'm doing all this right here and Monica ain't here, I'm gonna be mad. Monica gone to lunch and I'm still sitting here talking about all this right here. Be mad. I'll delete this whole video. Y'all better hope Monica's still in here. I better hope Monica's still in here. I promise you I'll delete this whole video.
Don't delete it, Tim. I needed it too.
All right, let me see here. So go to the daily chart. All right.
I'm working, but I'm still here too.
Okay, so all right, so this Friday we was looking at, right? That's the end of that week, and then this is the start of the next week. So the low we was looking at came in off a prior week. God dog it. All right, so all right, so okay, so our market maker model, and then that was the oh, is it? Was it? Yeah, this was the completion of it here. So it spilled over into another week. All right. So it spilled over into another week. This is when it finished there. Okay. And we'll go ahead and take this day off there, right? Okay. So now this was our market maker model we was looking at right here. Okay. All right. So that was our what's name? We said we came down into a daily order block. Man, when I was like, it's anticipatory reactionary point there. There it is. It is anticipatory reactionary point there. All right. There's always going to be something there, right? You always want to know, you want to go back and figure out what it was. But like here, the way price was moving, I was like, there's an anticipatory reactionary point here. We just saying that, but there it is right there. You got your order block right there. Right. And then if you want to go in and really fine tune it, right? You can look at the way I like to look at my daily PD arrays is body to body, right? I like to watch them body to body, right? But if you want to be an absolute perfectionist, right, you can look at the entire PD array. Okay. So based off how you want to watch it, right, we're just going to do the entire PD array because we're just going to be perfectionists. I like to do body to body because that's the bulk of the volume. That's the meat of the move. The wicks is like the manipulation, right? So that's why I like to watch body to body. Okay. If you look at body to body, we came down to mean threshold, right? If you look at the entire wick, we failed to meet mean threshold when taking out this liquidity right there, right? So that sell side liquidity right there. Okay, so how you want to do it, right? How you want to do your studies, that's on you. But like I said, I like to do my daily PD arrays, like order blocks and breakers body to body. All right. So that's what it looked like for overall. And then body to body, mean threshold. All right. So 60 minutes, right? We see that we're at our anticipatory reactionary point. I don't need these right here. All right. So we know that come on, get on there. Jesus Christ. All right. So based off of, right, institutional order flow, right? You got an area, right? We're coming out of this area, consolidation there, right? We get some offset accumulation, drop down, take sell side, displace away, right? Come up, right? Come up. Then once we get all the way up here, right? Once we get all the way up here, now we're not showing a willingness to drop down back below this area here. Right. So now we're not showing the willingness to drop back below this area here. And this is where we form that daily order block. Remember, we traced out the order block there, right? We're not on an intraday basis, right? You could say we're not showing prices, not showing a willingness to fall back below, right? The balanced price range, right? We offer sell side delivery, buy side delivery, and now price is not willing to drop below the balanced price range. Okay. Price is not willing to drop below the balanced price range. And then in doing so, we formed a daily order block, right? So now that I'm anticipating this daily order block to act as support because price refused to drop below and created a daily order block. And the order block's job is to block price. Okay. So now I'm anticipating this daily order block to act as support. Okay. Then we come up here and we create an area of initial consolidation and we start to retrace, right? Where am I looking for price to retrace to? My daily order block. I'm anticipating price to come back to my daily order block. This is my order block right here. That's my order block price at 23,109, right? Tim, you expecting it to fall 1,000 points? Yes, that's my daily order block. I know what the algorithm is going to do. So when it comes to my anticipatory reactionary point is at my daily order block, price is bullish. Now I'm looking for price to manipulate sell side, and then start giving me bullish signals, right? So when I come here into my daily order block, I'm in my order block now. So that low right there is a 2 p.m. low, New York PM low, right? That right there is a New York PM low. That's an important low, right? It's an important low because he's smiling. We can see that he's smiling. We don't have to draw it no more. We see that he's smiling. Okay, that's an important low because he's smiling, right? For those who really can't see it like that, right? He's an important low, so he's smiling. Okay, so we come down to our anticipatory reactionary point. We get there on a Friday morning. Right. So on a Friday morning.
One quick question, Tim. I don't mean to interrupt you, but you made a happy face to the left a little bit. How do you be spotting those happy faces? Because I'll be looking everywhere for them.
It's
The intermediate term low.
Yeah.
Or high.
Yeah. Following the money. Okay, so we come down here, right? Right. So it's a big move there, right? So we got a big move and we got a big move, right? So we got this V shape here. Now, what happened inside this V shape, right? We came down, we made a low, we made a lower low, right? We came up, we made a low here. Matter of fact, let's go to the other one because we just consolidating, right? We made a low, then we come here, we make a low here. Once we break that high, now we got a low, and a low. You understand what I'm saying?
I can see it when you do it, but I get you say in the big moves.
Yeah, you're looking for you like all these little lows in here, right? You got a million little lows, and now you're looking at we looking at too many. We too zoomed in, right? When it's a lot going on like this right here, right? We're just looking at like we're looking at the extremes, like we're looking at this right here, right? We're saying, okay, time distortion, right? Bam, bam. You see what I'm saying? It's like all this little consolidation in here is just it's smoking mirrors, right? So we're just looking at the overall moving of price, right? We're looking at the overall moving of price. And then so you're looking for like the lows that's doing something significant or the highs that's doing something significant, right? So we come down here. What do? We come down into a fair value gap, and then we rally back up and we take out a high right there. So the money is moving, right? So now that the money is moving, what is it telling me while it's moving, right? It's telling me I've come to an area of support, a fair value gap here, right? And then how can I trust that we're going to go back up, right? How can I trust that we're going to go back up? Because I created an intermediate term low. So now, right, that low should stay intact until I go and do something, right? And then now that I've gone and done something, right? Now that I've gone and done something, it took me a very long time to do it. So now that I'm coming back down here, right? Now I'm at an area that should support price, right? And now this is in a grand scheme of things. And now that I'm at an area that should support price, I need some fuel, right? Where's the fuel? The fuel is over here below this important low because everybody was looking at that as strong support and they're not going to take that, right? I've gone and done something already. So he's not safe anymore, right? He's fair game. When we take that, what do we say? When we take an intermediate term low or intermediate term high, we anticipate a deeper retracement. When we take that, we take off. You see what I'm saying? Like, so we're putting the stacks on stacks. So I'm coming to an anticipatory reactionary point. I'm taking a very important low. So when I take that low, now
it took that low, or it just went one spot, one tick past it. They look equal.
Yeah, took it out. See?
Oh yeah.
All right. So come down, took that low, and then where is that? That's right there at mean threshold of that daily order block, right? Remember what we said when we marking out this right here is not for what's happening here, is what's going to happen in the future. All right. And if we look at what's happening over here, all right, we have a bullish order block that intersects that mean threshold right there. This middle candle is intersecting that mean threshold, right? So when we come back to that mean threshold, we come back to that bullish order block, right? And not only do we come to that bullish order block, right? I can't make this stuff up. Y'all see it, right? What is that right there? That's a SIBI. What SIBI is that? That's the first SIBI that we got before we got this change in the state of delivery right here. First SIBI, change in state of delivery. BISI intersecting with that SIBI intersecting with that. What does price come to? Right there. Boop. Inversion fair value gap. BISI. Right? Sports price. Right there. Come back again. Inversion fair value gap. BISI. Right? This is the first touch. Remember we talk about first touch? Come to it. Right? And then when we trade away from it and go do what it's supposed to do, right? What do we come back to? Right there. That's the inversion fair value gap now that I highlighted. What SIBI was that? That was the first one that was created before we dropped down and got this change in state delivery, right? I can't make it up. It happens over and over, right? You annotate all of that, all that you annotate in that 9 a.m. SIBI from July 1st, right, became a high probability inversion fair value gap because it was the first SIBI created before dropping down and taking out liquidity and then getting a change in the bullish change in the state of delivery, right? The 10 a.m. BISI, right? So you got the 9 a.m. No, that's a 10 a.m. I'm sorry. Y'all know I love stuff like that. Oh, y'all know I love stuff like that. The 10 a.m. SIBI from July the 1st, right, became a high probability inversion fair value gap from the 10 a.m. BISI on July the 2nd, right? So the 10 a.m. BISI and the 10 a.m. SIBI was used as support on the 2 p.m. candle on Friday the 8th and created the smart money reversal. So we had a smart money reversal at those key PD arrays right there. All right. I can't make this stuff up. Y'all see it. Y'all see it. We walking through it right here together. All right. So however you want to annotate, make the notes, yada, yada, you. Okay. Now we came to mean threshold of the daily order block, swept the liquidity. Right. Then we came up and as price dropped down, right, we made a low, traded up, came back down, made another low, right? Then we made a low here, then we displaced up. Once we took out that high right there, right? So once we took out that high right there, that gave us a break in market structure, that gave us a change in the state of delivery, and it also gave us an intermediate term low, right? Because we can't, money dropped down, made a low, popped up, right? Low, low, and then this low here, once we got our breaking market structure, intermediate term low, anticipating that to stay intact. So we run it from the low up to our high of our niche consolidation. Now that's our dealing range that we're watching and looking for opportunities to trade inside, right? We're looking for the bulk of our trading opportunities to happen from the upper quadrant to the lower quadrant. This is where we're looking for the bulk of our trading opportunities to happen, right? This is our change in state delivery, right? We come up here, we notice there, we have the first SIBI here at 9 a.m., right? The first SIBI at 9 a.m., dropping down into the order block, right? 9 a.m. SIBI. Over here, we have a 4 a.m. BISI, and it's all in line with the lower quadrant. There, we form a bullish order block at, where I get 4 a.m. from? Oh, that is 4 a.m. right there. 4 a.m. BISI. Then we form a bullish order block on the 7 a.m. candle, right? So now I got a 9 a.m. inversion fair value gap. It was created by this 4 a.m. BISI, right? Then we created a 7 a.m. order block at the lower quadrant. We traded up, right? Took out liquidity here at the equilibrium of the range, right there, right? We have a BISI there intersecting with that. Use that BISI for a quick pop up, right? So that BISI is at a 4 p.m. BISI, right? And we came over here. We traded up above it there at 2 a.m. Then we created a SIBI here at 3 a.m. Traded up, pop above that liquidity at on the 8 a.m. candle. Then we trade down, sweep liquidity right there. We sweep liquidity on the 9 a.m. candle, right? So that's after the morning open. Then on the 10 o'clock candle, we drop down, right? Create a SIBI, and we come back down to where that order block and that inversion fair value gap that we talked about at that lower quadrant right there, right? And so after we get there, what are we anticipating this to be? Support. Why? Because we're looking for reasons to buy at this lower quadrant. Why? Because we're in a market maker buy model, right? So there's our opportunity to buy at the lower quadrant, right? Here's our opportunity to buy at the equilibrium, right? That fair value gap there at equilibrium, we trade down into it right there. Right. This is more bullish. We don't get to the inversion fair value gap this time. We just get to the bullish, because remember when I said we're buying off the BISI, the inversion fair value gap is just the confluence and the support of the idea of buying there. Right. If you're waiting on the inversion fair value gap there, you missed it. Right. You got it here, but you missed it there. As price gets further and further away, you want to see more and more shallow retracements, deep retracement down into the lower quadrant, right? Went all the way down to the inversion fair value gap, all the way down to the order block, right? Once we got up here, traded up to the upper quadrant, we came back down. We didn't even touch the equilibrium. We just traded into the upper end of the BISI. Didn't make it back down into the inversion fair value gap. Okay. Same thing over here. Once we went up here, right, we didn't make it back to the, right, see that right there? The first SIBI, when we drop down, inversion fair value gap, right? Got an order block there, got a fair value gap there, traded back down into the fair value gap, didn't make it back into the inversion fair value gap, didn't make it back to the quadrant, went up, completed the market maker model, right? You're always anticipating setups to form around these quadrants, right? You have to understand the narrative first, what's going on the higher time frame, what is price drawn to, what is it reacting off of? We're reacting off a daily anticipatory reactionary point. Now that we got that, now that we understand we're on the right side of the market maker buy model, come on, I said inside these lower, the intraday time frame, you want to study how are these market maker models being formed, right? And then once you understand you got the range correct, there will always be an ICT PD array waiting for you at these quadrants. You just have to understand what is price drawn to. Am I on the right side of price? And once you back test this and study this and journal this, then over time, you will start to be able to trust, okay, I can take this entry, right? And then you'll be able to fractalize it and take it down to the intraday time frame. Just like you saw me today said, you can fractalize it. Now we're just going to look at this new week opening gap, run the quadrants. Okay, we've done this here. Now we got this Bissy here. That Bissy should take us at least to here. This high is a very small move, but it should go at least to here and maybe even higher. And you saw it play out and it went to the higher, right? I don't have a magic wand. I'm from Fort Lauderdale, Florida. They didn't teach me this at Boyd Anderson High. Just through back testing and studying the strategies, I've learned to trust certain things, right? On the lower time frames, you're going to be offside a lot if you're not doing it based off of something on the higher time frame. The higher time frames are a little bit more forgiving, right? Because the intraday time frames is going to do a lot of moving around because it has to seek these imbalances and the liquidity on the intraday. So it's going to do a lot of moving around. But if you're just doing it based off the higher time frame, yes, your stops are going to be wider, but it's going to be more forgiving than the intraday, right? Because the intraday may give you a very small stop, but if you trade in something that's volatile, you can get chopped up if you're not entering at the right time. That's where time comes into play. You only want to look at the chart during certain times. If it's not offering it to you in your time window, back away and come back another day, man. Live the trade another day. I think I'm kind of tired of talking right now, but if somebody got a question, I'll answer.
Yeah, we ain't going for that. We think you got a magic wand in the crystal ball.
I do got a crystal ball now. I can pull it out if you want.
Oh, crystal ball. Hey, as far as the tools and trading view, who created trading view? Did the same people who created the algorithm make trading view? Like,
now trading view just a charting platform that you can trade on.
Okay, but trading view got these tools to fib to how did they know you was going to need this stuff is what I'm saying.
Oh, those are just common trading tools. Those are just common tools that you need on. It's just like any platform. When you come out with a platform, everything that they know traders use, they're going to try to incorporate it. You know what I'm saying? So, and some platforms are more intuitive where it's easier to get to the tools. Trading view is just one of the ones that I'm used to charting. Like, I like it. I find trading on Trading View kind of wonky because I learned how to trade futures on NinjaTrader. So I do all of my charting on Trading View, but I actually click the button on NinjaTrader. Like on NinjaTrader, I don't have any boxes on my NinjaTrader. My NinjaTrader screen, it looks like
just plain, huh?
Yeah, it's just plain. It's plain. It ain't nothing on my NinjaTrader screen.
But man, that film too, that's magical, man. If you know what you're doing,
ain't nothing magical about it. This what my my NinjaTrader look like. My NinjaTrader look like
that's
this.
predicting the future, man. Yeah.
It does predict the future if
I'm telling you, man, that film too is something else, man.
Yes.
Like you say, if you find the right spot to put it, come on, man.
Yeah. NinjaTrader, the NinjaTrader desktop app is clunky. It is very clunky. It's very antiquated, but that's where I learned how to trade. So it's like I feel more comfortable entering my trades on NinjaTrader, even though it's clunky, even though it, you know what I'm saying, it's antiquated. The charting tools are abysmal. They like, I hate charting on NinjaTrader. It's like, but charting is so much better on Trading View, but just when it comes to buying and selling Trading View, I don't feel comfortable trading on Trading View. But I'm glad you said fib tool, Lump.
Yeah. What's up with it?
When it comes to the fib tool, it's not the tool. It's why am I reaching for that tool? Just like anything else. Why? Like the fib tool is your best friend if you know why I'm choosing this low and this high, right? Because you can't just take it and put it on any low and any high.
I know.
And, you know what I'm saying? But before I learned the concepts, right, I was just taking the fib tool and looking for a retracement based off of this run. And sometimes you get it right. You know what I'm saying? Sometimes you get it right. You be like, okay, I'm just basing it off of this run right here. And you just basing it off that run because the run looks big, right? And it just so happened that you pick the right one.
Yeah.
You know what I'm saying? But and it's like, and if the algorithm is sweeping liquidity on both sides, you can trade within that range. You know what I'm saying? Like if you just picking a run, right? If you picking a run, as long as you picking a run where the algorithm has sweep liquidity on both sides, you can trade within that range. Why? Because that's a dealing range that the algorithm understands, and it will act algorithmically within that dealing range. But you don't want to try to force it outside of this. Like, you don't want to try to force it to here just based off of that, right? You want to look for this based off of this. You see what I'm saying? Like, if I'm looking for this high, right, I'm doing it based off of what the price did here, not based off what the price did here, because it can very well take this high, come back, take this low, and still go and take that high in a high resistance condition, right? Because I'm looking at a smaller piece of price trying to force a higher narrative. But sometimes you get lucky where, right, you find a gem where I'm entering here based off of this, but I get it to go to there, right? You get lucky. But if you just focus on just that dealing range, there's plenty places to trade, right? And if you look there, even with this right here, just pick it, swept liquidity there, came down, right? So now you're taking liquidity on both sides, right? Creating a dealing range. And then look at there, that lower quadrant, that right there. You got a fair value gap on that upper quadrant. You got the first
Okay,
SIBI.
right there where you're marking that, is that a happy face down there with that line at the bottom right there?
Yes, it is.
Okay. All right.
Right. Yes, it is. Right here.
Yeah.
Right. And where did that happy face get formed? Right there at that order block, right? You got the order block right here, right? And inside this dealing range, that lower quadrant, right? That equilibrium, that upper quadrant, right? You got a fair value gap on that upper quadrant. You got a inversion fair value gap that's spanning from the upper quadrant to equilibrium.
I
Right?
see you here to learn and share. I see you. She gave me a shout out.
Oh.
Hey, your fancy dance is a little bit behind your mouse. Or maybe it's my phone.
No, it looked kind of weird. I don't know what's
It's
going
trailing
on.
it.
Yeah, it like when I move it, like the mouse get outside of it. It's probably tired. It's saying we've been on here since 9:30. Since
Tired
9
like you. I told y'all Tim don't sleep now. Tim don't sleep. He gonna be up 3 o'clock in the morning sending me text messages. And then he go hit the disco and somebody took a trade.
Let's see what let's see what let's see what's going on with the market real quick before I jump off of here. Okay, we still going up over there. Let me go back to my NQ. Oh, I forgot I turned everything off. Yep, so we're back up. Right now we've traded through that SIBI, the hourly SIBI. Like that was one that wasn't on my radar. Right, we've traded through. We closed very close to the high. Still haven't created an inversion yet, but we're showing extreme weakness of that SIBI. Right, it's either going to go ahead and give up the ghost, or it's going to be a very high resistance right now. So the buy program from what we started today is still intact. The buy program is still going. All right. Remember, we talked about if the sell program was going to be strong, we wanted to see it stop at that inversion fair value gap. And right now it has not stopped. Whoa. So it's our daily. All right. That was our 20-day look back. We were saying that was our next draw if the bullishness kept going. Looked like I done deleted some stuff. Oh, let me go down to 15-minute. All right. That right there. All right. So that's where we wanted to see price stop if the bearishness was gonna keep up. Right. So we see trade into it. We pull back into that equilibrium there. I didn't mark that. What was that equilibrium from? I didn't mark that. Always looking at the new week opening gap. That's what it was. Consequent encroachment of the new week opening gap. Yes. Right. So consequent encroachment of the new week opening gap. Right. That's what we're talking about. Fractalizing. It's right here. Right. Came back to consequent encroachment. Right. Came back to that quadrant. Remember, we're looking at that quadrant. Right. And then now we've closed above this 15-minute inversion fair value gap. So now you're looking for that. I said we get above here, you'll be looking for this new week opening gap to act as support. That's our next draw right there, that upper quadrant right there with that SIBI resting right there. Okay, so price, the bullishness of the day from today stayed intact, right? Bullishness stayed intact, right? We had that low, it stayed intact. Then we came down, right? Created a low there, right? Blast up, made another low there, then blast up. Now that we blast up, right? Right, it gave us a low down here. So the bullishness is still intact, right? Then we started watching the quadrants of the new day opening gap, right? I think we might have been on, I don't know if it was on a 5-minute or a 1 minute. We were on a 1 minute, I think. Yep, because we came down, right, into the order block, into the quadrant, right? We came up, we talk about that quadrant right there, that Bessie right there on the quadrant took us back up into that high, right? And we came over here, do the dude inside there, drop back down where? To the upper quadrant. We've gotten to above the upper quadrant, drop back down to the upper quadrant, back down into the fair value gap while taking out liquidity right here. Then now we go back up above the high, right? It's doing the same thing that we just looked at in price back there, right? With these quadrant levels, right? What do? Once we got above here, we use this as support. And we said we used that support, but so since we used that as support, right, we was looking for that to take us higher, right? We said it's gonna take us at least to here, right? And that's the higher, right? Boom, hit it. Then we dilly-dally here, consolidate in there. Then what do? We drop down back into that quadrant, take out liquidity, right? Trade into the imbalance, right? Then displace away, right? Taking out the high. And now we're back above the high of that, right? And we here, right? We come out of, right? Didn't do much inside that macro, not a thing. After the macro was over, we dropped down into there. Then we rallied up there, right? And then consolidating there. Now we're starting to push up again right there, right? But it's the same thing we have been talking about on the daily time frame. Same thing was talking about on that 60-minute time frame. Same thing. It's just right here. When I said you can fractalize the concept, remember way back earlier today, I said this is when you fractalize, you can fractalize the concepts and look for levels to trade on intraday, right? If you remember me saying that, good. If you don't remember, rewind it and look at it, right? And now this new week opening gap, we've used all of the quadrants, to get us back above there. And now you would be looking to see if we draw into the next bullish draw. Right? Does it have to get there? No. But what are you doing? You're trusting the process. And here, just like we talked about this right here, right there, as it was coming into it, right there, boom, that should take us at least there. Boom, it went there, right? We pull it back into the order block after going up to the high. Once we pull back into the order block, we went back above the high. I ain't got a magic one, man. I ain't got a magic one. Hopefully y'all get something out of it, man. This was like a celebratory stream. You know, I've been neglecting y'all. I wasn't around. I was worried about my sweetie being stuck in Jamaica. First, I was worried about the storm. And then after the storm was over, I was worried about it being stuck in Jamaica. I was neglecting y'all. You know what I'm saying? This was like a nice little welcome back stream.
Well, they done got back now because somebody done took a few trades this morning.
they done bounced back.
Come on, man. You know they did. That's why we get up every morning to see if you gonna give something where we can get in and get a trade. Act like we just coming to school.
They done bounced back.
You better do it.
Soon as I said we should get, oh, bye. Yeah, like how they did it before. They be like, oh, I just took that. I just made some money off that. Hey, this is I'm not a financial advisor. I'm not a fiduciary.
Okay.
Nothing I
Gotta
say
put that
should be taken
disclaimer
as
out there.
financial advice. You should always consult a financial advisor before making any investment decisions. Yeah. Hey, man, that's it, man. That's all I got. Matter of fact, I supposed to been at the gym right now. Now, when I get to the gym, then my mama gonna be calling me. Hey, that's it. I don't care if anybody got anything. Monica, I did all that extra stuff was for you. Monica, listen to me. We all get to a point where we feel like we at the end of our rope, right? We at the end. I know you said you don't actively practice what you was raised on, right? But God loves all men. God loved the world so much that he gave his only begotten son, right? And he is never far away from you, right? And if you just you don't have to believe, you ain't got to believe, you know what I'm saying? But if you just give yourself a little grace, right? Don't get down on yourself, right? Don't feel bad about your situation. Don't wallow in the mud. Put on your big girl panties. Say, hey, this is my situation. I can lay down in this mud, or I can get up and I can do something about it. Get up and do something about it. Right? Back test this stuff. Right? Use this video as just a template. Back test this stuff, journal this stuff, and then develop yourself a strategy. Develop a model, and then start to execute, man. Monica, Monica, do you got Discord? Do you got Discord IG? Do you got Discord or IG or something like that, Monica? Monica, do you got Discord or IG? Monica. I don't be on IG, so I want to do something for you, Monica. You ain't got no social media? Do this right here. I know you can't get on the Zoom, right? I mean, you can't get on the Zoom and talk, right? But click on that Zoom link that I put in there and put your email send me your email inside Zoom. Right. I pinned that Zoom link to the top. All right. We ain't never too old, but I pinned that Zoom link to the top. Click on that link, Monica. You ain't got to talk. Right. Come in the Zoom and send me your email in the Zoom. Right. Or yeah, I mean, if you don't mind putting your email in the YouTube chat, you can put it in the YouTube chat. But you can come in the Zoom and you can send your email directly to me. What I'm gonna do, I'm gonna send you a link. I'm gonna send you a link for the Smart Money Manuscript, right? For free, for you to get in there for free, right? Now the Smart Money Manuscript, it's gonna you can go through the lessons, you can study them, you can take the quizzes, but the most important part of the Smart Money Manuscript is every second Saturday, right? No. I don't want you to buy it. Every second Saturday, we have a Q&A, right? Um, and you can pull up and you can ask questions. You can get on there and you can ask me questions directly to me. And outside of them questions, you have a format, you have a course that's put together, designed to take you from the beginning to the end, right? So I made a promise to myself last month, when I can afford it, I'll buy it. Okay, that's fine. When you can afford it, you can cash out me $69.99. I don't want to. I don't want you to go against, you know what I'm saying, your morals, or your oaths that you make with yourself, right? But at this time, right now, give me your email address. Click on the Zoom and come in the Zoom and give it. If you don't mind putting your email address on the YouTube chat, put it there. But give me your email, because I've been down before, right? We fall down, but we get up. I've been down before. And I do this to help people, right? Right. I use the Apex code all the time. I will buy. We if you're using the Apex code and you ain't got that, we trying to get you there. It ain't about me making money off you. It ain't about I I want to help you. And this is the way I know that you'll have access to me at least once a month to talk to me. And plus you'll have solid education. Like I said, if you want to give me the money, if you want to like give me the money later for it, that's fine. I don't that's fine. But I want to make sure you got the tools in your hand and you got access to me. Cause like I say, you don't use social media, right? Right. So go on that, don't tear up, right? Give me your email. Okay. I'm gonna send you the link for the Smart Money Manuscript. Okay. And that way you got access directly to me, because we got a Q&A coming up this Saturday. Our monthly Q&A is this Saturday at 12 o'clock. It's every second Saturday at 12 p.m. Right. And then we also got a little board in there that we don't use. You can leave questions in there. Okay. And then you say you ain't got social media. I appreciate that you say I've helped you so much already. I could have had your email address by now, and I can continue to help you a little bit more. All right. All right. I can't. Thank you. So she says she can't. You don't understand. You put together all of these pieces. I have been trying to figure it out for 20 years. We're going to figure it out together. All right. I ain't going to push no more. Next time I see you, when I see you tonight, I'm going to tell you the same thing. Pull up, give me your email address, and uh, we're gonna help you get there. But the thing of it is the mentoring part of it. Right? The mentoring part of it. Right? The mentoring part of it. And okay, we'll do this right here. Sometime today, right? Sometime today, download the Discord app on your phone, right? And sign up for Discord. And then right, sign up for Discord and then look me up. What is even better than me doing inside the what's the name? I clicked the wrong thing.
What you say? What I do?
You inside the voice. You inside the voice chat.
Oh, my bad.
So I'm let me see, how do I find my name? Tim Rogers. Right. So look up Tim Rogers. Download Discord. Right. Look up Tim Rogers. That's me. It's gonna be a little spider, little black spider icon on there, and my name Tim Rogers. Right. Send me a friend request on there. Right. When you send me a friend request on there, I'm gonna add you into the Discord. Right. I'm gonna add you into the Discord. That way you'll have direct access to me inside the Discord. Right. You can come into the Discord. You'll see me when I do like the pop-ups and all that right there. I'm gonna add you to the Discord. And that way, you know what I'm saying? If you wanna buy the course, that's fine, but I still want you to have direct access to me to be able to, you know what I'm saying, help with those questions, or help with them times where you feel impatient, or help with, just help you put the pieces of the puzzle together, because it takes the mentoring. The mentoring is what helps you put the pieces of the puzzle together. All right. So do that. Download Discord today, put it on your phone, look me up, and then send me a friend request on Discord. And it like if you go in you said too old, you might be like me, right? So when you go in there, you just go in there and do like a little, so you got like direct messages right there, and then you got um find specific users, right? You're gonna be looking for me, that dot Tim Rogers, right? And once you find me, then um just send me a friend request, right? Send me a friend request, and then we let me see, go through here. I ain't never sent nobody a friend request, but I be seeing people sending me friend requests. Who know how to send a friend request on Discord? This one I be needing my kids. I need the ones where I don't know the people. See, right there. See how I put dot Kim? I just started typing dot Kim, like that's the Kim I know, and it's showing like all these other people right there. Right, somebody there, and then hit add friend. Like I don't wanna add that person as a friend, but yeah, that's what it was. Like I came to the direct messages, I clicked on start a conversation, and then I just started typing something. Right, nobody named Bob. Right. Right, Shields. Like somebody just go in there and find me and then add me. Right. Start search with at. to narrow. Okay. Let's see right here. At Tony. Okay. Okay. Yeah, say start search with at. All right. Tom. I can't do myself. The G is silent. All right. Let me see if it'll let me do myself. The Elohim. Yeah, it won't let me do myself. But yeah, do that. We'll start there. It's the way you explain things. I don't know why. I can understand it when you explain it versus other people. It's the strangest thing ever. But I'm so thankful for you and what you do. I appreciate you, man. I appreciate you. All right, man. That's it. It's 12 o'clock. I gotta go try to get in a little work in the gym before my mama call. I appreciate y'all for hanging out with me all this time, man. Hopefully y'all got something out of this. We've been on here a really long time. We've been on here a long time. We've been on here since 9 o'clock, 10, 11. We've been on here for 3 hours. Ain't nobody gonna go back through and look at this whole stream. Hey, man. I appreciate y'all for hanging out with me. If this is first time tuning in to Tim's Tidbits, you was gone a long time ago. If you got something out of it, hey, I done did my job. If you ain't getting nothing out of it, I promise you, I'll try so hard next time to help you get an aha moment, understand something, see something a little bit clearer. But until the next time I do, it's your boy, Timothy Lee Rogers Sr., a.k.a. Aranya Grande. That's just big spot if you know I blow Espanol, man. Y'all be safe out here in these trading streets, man. Gone.